Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news that China is lashing out at criticisms by democracies. But first on Wall Street, the Fed purchased more than $500 billion in US securities from banks last week and keeping their banking system liquidity up, as the usual sources of the repo market pulled back. While a $500 billion level isn't unprecedented in a week, it is still very high and the third higher than the prior week. Certainly something to keep an eye on. And another thing to keep an eye on, in Canada, the Chinese government has warned them not to follow the American lead and formally back protesters in Hong Kong, saying such a move would cause very bad damage to an already poor ties with Beijing. And Australian democracy is under specific attack from China. A record number of Hong Kong voters turned out yesterday in peaceful district elections that are seen as a referendum on the increasingly violent protests that have gripped the city for nearly 6 months. Early results show that pro-Beijing candidates are losing to pro-democracy candidates. If this trend is widespread, Beijing will be furious and more critical of the power of democracy. In the US, their manufacturing PMI is marginally firmer, but still very low at 52.2. Their services PMI is also up, but even lower at 51.6. A reading of 50 is stagnation. In Europe, these levels are even lower again. In Japan, they're also stagnating. In Australia, their PMI has slipped from stagnation to contraction. And there's been more probably pointless posturing by the presidents of the US and China in their desire to sign up to an initial trade deal and defuse the tariff war. But scepticism abounds now. Certainly markets are ignoring this official talk, with the S&P 500 having a small loss last week. In the US, Bridgewater Associates, the world's largest hedge fund, has bet more than $1 billion that stock markets around the world will fall by March, and that's according to a Wall Street Journal report. In China, they've revised the size of their economy higher with a one-off census adjustment that adds more than 2% to previous data. US Treasury 10-year yield is unchanged at 1.77%, which is a 6 basis points decline over the past week. Gold was down $2 at the end of trading last week and will open this week at $1,461, a $7 fall for the week. And US oil prices are lower at just on $58 a barrel. The Brent benchmark is just under $63.50 a barrel. These are very similar levels to a week ago. And the Kiwi dollar has been remarkably stable over the past week, now at 64.1 US cents. On the cross rates, we're now at 94.5 Australian cents, and that's a half-cent gain on the week. Against the euro, we're little changed at 58.1 euro cents. That puts the trade-weighted index just on 69.4. But the same can't be said for Bitcoin, which is lower yet again this morning at $7,038, a drop of $17 for the week. That's after China launched a fresh crackdown on cryptocurrencies, warning of the risks entailed in issuing or trading in them. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.